Just a minute. Webinar has started.
Okay, good morning, Suswagatam. Welcome everybody to this Fortnightly Market Outlook webinar. I am Devarsh, and this is our Fortnightly Market Outlook webinar where we are trying to share our insights from global markets, the local markets, from technical, derivative, and fundamental perspective. Today, I am joined by my two colleagues to share their perspective. Good morning, Nagaraj.
Hi, good morning. Good morning, everyone. To welcome to Fortnightly Market Outlook webinar.
How are you doing, Subash?
Yeah, I'm doing fine. Good morning to you, sir, and good morning, everyone.
Good morning. So without further ado, let's just start the presentation. So what we'll do, the flow of the presentation will be like that. First, I'll discuss about the global market developments, and then I'll hand it over to Nagaraj. Nagaraj will share his perspective from technical analyst, and then Subash will come in. Subash will share derivative data and insights. And in the end, we'll try to answer as many questions as we can during the span of next 20-25 minutes. We hope to finish it in 35 minutes. So let's start.
Yoshua, please make it in a full screen mode.
Is it full screen now?
Yeah, it is. No, actually, it is not.
One second. How about now, Nagaraj?
Yes, it is now in full screen.
All right. So sorry for the delay. So now, first let's discuss about the international markets. So international market, especially the S&P and the Nasdaq, are hitting fresh all-time highs, and they have further risen about 0.5% to 1% this week. They are back on the solid corporate earnings. Most of the banks like JP Morgan, Goldman Sachs, Morgan Stanley, Bank of America, they have delivered good, strong second quarter profits. Netflix also announced the results, which were also in line with market expectation, and the guidance was slightly below, but overall the numbers are on track. The economic data, the macroeconomic data is still very robust. Retail sales or the unemployment numbers, the PPI numbers, all are indicating that the US economy is still very strong, and that means that the Federal Reserve may consider rate cut little lower than what market were earlier expecting. There is, as we know, have been discussing, there is a struggle or a tussle going on between the Donald Trump, the president, and the Fed chairman or Jerome Powell about the trajectory of the interest rate. So that struggle will continue. We are expecting that the time or the span of the Jerome Powell, the Fed president, may be curtailed or shortened, or Donald Trump may announce a successor before the end of the time period in order to undermine the authority of Jerome Powell. One more important thing which is going on around the world, which is impacting the markets, are the trade policy uncertainty. President Donald Trump has signaled that the new tariffs are going to be announced on EU, on Russia, and he is trying to sign a lot of letters. He's sending out a lot of letters before the August 1st deadline, and we expect that there could be also a deal between US and India. We have been waiting for this deal for quite a long time. It is, as I wrote earlier, that it is like a waiting for a Godot, like a Samuel Jackson's famous play where we have been waiting, but it is not coming. But now it seems that the final round of negotiations are about to get over, and we may have a deal before the 31st of this month. One, excuse me, one more important development for the across the world, which is important from the cryptocurrency world, is the US President signing the Genius Act. Now, regulatory framework for cryptocurrency in US market is now in place, and especially this regulatory framework is for the stable coins. So the cryptocurrencies are some currencies will be packed to the value of the asset like US dollar. This is uh, very bullish for longer term for cryptocurrencies and for US dollar. And the provision is that the stablecoin insurance will have to maintain 100% of their reserves with the liquid assets such as the cash. So if you are in a cryptocurrency world, if you sell your cryptocurrency, convert it into stablecoin, then rest assured that the stablecoin provider will have to keep their assets into the US dollar. Now, whether the cryptocurrency itself will survive or whether cryptocurrency has some value, that is still up for debate. But the value of US Bitcoin has gone above $1 lakh, and I'll show you that. Now, coming back to the markets, as we can see, the S&P and Nasdaq have done well relative to the Dow. The international other markets are also up between 2 to 3% within this fortnight. Indian markets have had corrections last fortnight. After touching the highs over the last 2 weeks, we have seen a correction from 2 to 1 to 2% across our markets. So the rally which we had over the last month, first fortnight we went up. In the second fortnight we have corrected. More or less now we are back to where we were about 1 month ago. So 19 June levels are more or less there on the benchmark indices in Nifty and Sensex. But within that time, the mid cap and small cap has outperformed. So they are up by 3.5% to 5% over the last 1 month. That's still healthy, but that is not as high as comparable to other markets of the world. We are basically underperforming. We are flat to mildly positive, while international markets are up between 5 to 7%. What are the sectors which are dragging us lower? Obviously, the technology, as we mentioned, the TCS numbers were not good. And as you can see, in the last fortnight, IT index and technology index are down about 5%. What is keeping the markets on the higher side, or what is supporting the markets? FMCG and reality are supporting the market. They are up about 3 to 3.5%. So this is what has happened. The capital goods, consumer durables, IT and technology, other stocks are dragging the market lower. FIs have been selling very heavily. The 12-month rolling, their numbers are now deeply negative, and they are about $13 billion of selling has happened in the last 12 months. So as you can see, the rolling ones, they started buying in the late June 2022 till June 24. They have been net buyers. From June 24, they have been selling, and the net numbers are becoming negative. Last few months, the buying and selling is more or less same. That means from March month, the net flows from international markets are hardly anything for Indian markets. Okay. Anything important schedule over the next 2 weeks? Let's discuss this. So this is the economic calendar. And as you can see, on Thursday, 24th July, ECB, that is European Central Bank, will have a meeting for monetary policy. And on the 30th of July, US FOMC monetary policy is there. These are two important policies. What is the trajectory of interest rates? What will be the cost of capital for global markets? That will be decided in these two meetings. And depending upon what they do here, it will have repercussion across the world. So that is what is scheduled in global markets. As I discussed, just to recap, the US markets are doing well. They are at all-time highs on back of earnings. They are up about 5%, while Indian markets are now more or less flat, and we are underperforming. Underperforming because the earnings are not good, especially the technology companies, and important monetary policy announcements are there on July 24th and 30th of July. So that's what I wanted to share from the global fundamental perspective. Now I'll hand it over to my colleague Nagaraj to share his insights from technicals,
Thank you,
short-term
Devarsh.
technical analysis. Over to you, Nagaraj.
Thank you, Devarsh. Is my screen visible?
Yes, it is. Go ahead.
Yeah, thank you. Good morning, friends. Without wasting any time, we'll discuss about the technical aspects of Fortnightly Equity Insights and Spotlight on the Market Opportunity webinar. Friends, what we can observe on the daily chart is after a consistent up move of by the way of higher tops and bottoms over the last few months, Nifty has rebounded on the downside by forming a lower tops and bottoms. What we can observe, the trend line support was there, which was holding over the last few weeks. Now, trend line support is now at the danger of a breakdown. So, bulls are in a surrender mode. Crucial trend line support around 25,000 has been broken slightly on the lower side. And the overall chart pattern, the lower tops and lower bottom formation recently is indicating that markets have formed an important reversal pattern, top reversal pattern. They are likely to come down. Now, move to next slide. Friends, this is the weekly time frame chart. What we can observe is the last month fantastic upside breakout of the previous 2 months range movement around 25,200. Market clearly shown some signs of valid upside breakout, closed higher on that week. After that, the rally which was seen in the last month has been continuously fizzled out over the last 3 weeks. What we can observe, the continuous decline in the last 3 weeks that has been negated, the valid breakout of the last month has closed below the support of the breakout point of last month, where it is around 25,250, currently trading around 24,967. The overall chart pattern is indicating the breakout, what we have seen in the last month, has been negated. That is negative for the underlying trend of the Nifty. We could see more weakness. Currently holding at the support of weekly 10 period EMA, which is the purple line, what we can see from here onwards. But there is no signs of any recovery. Though placed at the important support, Nifty has shown any signs of recovery from the support. That means that support is going to be broken on the lower side. Once its support breaks, and we mentioned that this is the positional support we had mentioned in the last week, if the 25,000 gets broken decisively in the next week, and we could see the next lower supports, which is the 24,500, which is going to be a strong support, as we have seen some multiple weekly low formation at the lower levels. We have seen some sizable upside bounces in the past, in few months back, from those 24,500 odd levels. So that could come into picture. So friends, immediate support, immediate resistance is placed at 25,250. These are the technical parameters, the technical patterns, what we are decoding. But even if Nifty at any case sustains and strongly moves above 25,250, which is the initial hurdle, that means these bearish sentiment what we have created recently in the last couple of weeks has going to be negative. So, friends, monthly chart is intact, no doubt about that. We have seen some 4 months of a significant upside rally from the lower levels, 21,750 to around 25,500, 25,600, continuous rally. We have seen some volatility in between the months, but market stood up during these 4 months and clearly closed at the higher level. Friends, now it's time to show some correction. After having moved up by 4,000-5,000 points from 21,700 to 26,500, 26,600 levels, Nifty showing some signs of downward correction from the higher levels. That means long-term uptrend, what we can observe on the basis of the last 4-5 months, it remains intact. What we are seeing is a healthy downward correction from the higher levels, and we could see some more correction as part of the long-term uptrend. After that, Nifty could bounce from the lower levels, maybe at 24,500, maybe a slightly lower. We will discuss over the period of time. But currently, the long-term trend remains intact. We are seeing some healthy correction of a long-term trend. So friends, the Bank Nifty, what we can observe, Bank Nifty was moving in a larger consolidation phase over the last couple of months. We have seen some kind of a wedge type formation, what we can say, a rising wedge type formation, which normally forms at the higher levels. And normally wedges are negative indications, and more often wedges are going to break on the lower side only. This is what exactly happened this time also. After forming a rising wedge type of pattern in the Bank Nifty over the last couple of months, that rising wedge is at the place at the edge of a sharp downside breakout, currently placed at the edge. On the smaller time frame, it has already broken down of the support, and a larger time frame like weekly, it is placed at the edge of the breakout. The overall chart indication is there is a possibility of a downside breakout in Bank Nifty. So once it breaks below this rising wedge pattern, one next lower to be watched around 55, 150, which is the previous important swing low. And in any case, friends, the resistance, immediate resistance is placed at 56,700 levels. We technically believe any counter trend move, if the resistance breaks with a big bang movement, then this negative setup will be negated. That time the upside will continue. But we will discuss right now about that what chart pattern is indicating, what the market is forming. And as per this, market is showing negative signs, and we could see some downside breakout. We could expect one downside breakout in the Bank Nifty. These are the broader market indices, mid-cap 100 of daily and weekly chart. What we can observe on the daily chart is mid-cap 100 is also showing some signs of triangular pattern, what we can observe on the daily chart. And if mid-cap 100 is currently placed at the downside breakout of the triangular pattern. Normally, triangular formation at the higher levels either moves into either side of a direction. This time, it is showing some clear sign of a downward direction, downside breakout. So that is what we are expecting in the near term. But what weekly time frame is suggesting, weekly time frame chart of the mid-cap 100 is showing the bearish pattern formation like an evening star. Last week, we have seen some evening star. Evening star is a top reversal pattern technically, which is a 3-candle pattern. After a long up move, we have seen some doji kind of a formation. After that, in last week, we have seen significant decline. After that, market showed some signs of upside bounces. The upside bounces in the mid-cap of line last week has been fizzled out, placed at the lower levels. So currently, the bearish evening star pattern is still intact. On the other side, small cap is showing little resilient to the broader market, little better than the mid cap, but the trend remains weak. So currently placed at the support, this small cap placed at the edge of the support. There is no signs of any recovery, significant recovery from near the support. That indicates there is a possibility of a downside breakout of that trend line support. On the weekly side, showing some distribution type pattern, top reversal pattern has been found in last week. That pattern remains intact. The small cap made an attempt to break about that pattern, but failed to break, as closed lower after showing some spike in the last week. So friends, the conclusion is the markets have extended its losses in last week, negated the bullish sentiment created in the last 2 months back. The upside breakout of the larger range movement has been fizzled out of June month, has been fizzled out in the last 3 weeks as market have continuously declined. There is a possibility of Nifty sliding below 24,900, currently placed around 24,950, 960 levels. We are expecting there is a possibility of Nifty sliding below 24,900 in the coming week, and that could slide Nifty towards the next support of 24,500 in the near term. Any pullback rally from here to encounter a strong hurdle around 25,250 in a downtrend, we believe pullback rallies after downside breakouts, after breakdowns are going to be a sell on rise opportunity. On that basis, any pullback rally around 25,250 is going to be a sell on rise opportunity for the near term. And the downside breakout of a larger wedge in the Bank Nifty is clearly indicative that Bank Nifties could come down. 55,150 is going to be the next support for the next week. Any attempt of upside bounce likely to find resistance for Bank Nifty around 56,700 levels. So the sharp trended up move of the last 3-4 months halted in the broader market indices like mid cap, small cap. There is a possibility of some more corrections in a mid and small cap. We are advising, it is advised to place a strict stop loss in the trading long positions of mid and small cap segments, as this sector is showing signs of some downward correction ahead. Sectorally, banking, infra, pharma, CPSC, PSC, energy sectors are expected to weaken further in the coming week, while metal, FMCG, automobile, realty could possibly show some resilience. I am not expecting any up move, but show some resilience during the expected weakness in the broader markets. Friends, that's all from my side. Now, I would like to invite my colleague Subash Gangadharan to discuss about the market health about regarding the derivative indicators. Over to Subash.
Yeah, thanks, Nagaraj. Am I audible?
Yes, you are audible.
Is my screen visible, the PPT?
No. Yeah, it is now visible. You have to make it in a full screen mode.
Okay. Yeah, so good morning. It's visible right now, right?
Yes, yes.
Okay. So good morning once again. So this is Subash. So I will be giving a brief outlook on the markets based on the derivative data. We'll be looking at the open interest data in the futures market. Then we'll be looking at the option distribution charts. And we'll also be looking at what the FIs have been doing in the derivative markets, what positions they have been building. So if we first look at the futures data, we can see that there has been short buildup in both the Nifty futures and Bank Nifty futures this week. In Nifty futures, there was a 8.34% rise in the open interest, with the Nifty declining by 0.72%. Similarly, in the Bank Nifty also, there was a 17.1% rise in open interest, with Bank Nifty falling by 0.83%. So as you can see, in both these segments, there has been short buildup. And if we look at the options data, we can see that there is healthy put writing at 24,900 and 24,500 levels. As you can see in this chart, 24,900, there has been good put writing, followed by 24,500. So this indicates that once 24,900 is broken, then the next major support is around 24,500. And on the upside, we see healthy call writing at 25,100 to 25,200. So this is the immediate resistance for the near term. Now, when we look at the FI data, we can see that they have been building shorts in both the index futures and stock futures. In the index futures, they net sold 8,507 crores, and open interest increased by 37,410 contracts. And if we see the breakup, we can see that there was a short buildup in both the Nifty and Bank Nifty futures, according to the data. So they were building shorts in both these indices. In the stock futures also, they were building shorts as they were net sellers to the tune of 6,425 crores, and open interest increased by 63,164 contracts. If we look at the FI long to short ratio, it has been continuously falling since the beginning of July. And on Friday, which was yesterday, the long to short ratio touched a new month low for the month of July. So this is a negative signal for the short term. If we look at the sector-wise data, we can see that there has been long buildup in the realty and pharma sectors, and short buildup in the IT sector. So coming to our outlook, we remain cautious, and as there is put writing at 24,900, that is the immediate support. And once that is broken, we expect the Nifty to slide towards 24,500. So this outlook is based on the fact that there has been short buildup in the Nifty futures. Also, FIs have been building shorts in the index future and stock futures segments. And put writing, of course, as I mentioned earlier, at 24,900 and 24,500. And also call writing at 25,100 to 25,200, which indicates that these are the significant resistances for the coming week. Coming to our Bank Nifty outlook, we again remain bearish on the Bank Nifty with a stop loss of 56,700. As I mentioned earlier, there has been short buildup in the Bank Nifty futures this week. Also, the put call ratio for the Bank Nifty has fallen from 0.88 last Friday to 0.78 on yesterday. So this is again a negative signal. On the upside, 56,500 to 56,700 will act as a strong resistance as we see call writing at these strikes. And aggressive put writing is seen at 56,000, which indicates that this is the immediate support. And once this support is broken, then the next major support is around 55,000. where again we see a lot of put writing. So 56,000 and then 55,000. These are the levels to watch on the downside. Yeah, that's all from my side. Now, thank you.
Hi, is my screen visible now?
Yes, it is visible.
Okay. So to conclude, we are saying that the supports are at 24,900, 24,500 is the strong support, 25,200 is the resistance. FIs have a heavy short positions in the market. So if there are some triggers like India-US trade deal over the next fortnight or quarterly results, like we had Reliance results, which was little below market expectation. Today we have RBL Bank, Yes Bank, Union Bank, ICICI Bank, HDFC Bank, AU Bank. All these bank results are there. So any development here will impact whether markets head towards 24,500 or 25,200. This is the range which we will monitor over the next fortnight. Next fortnight also, as I mentioned, the 1st of August deadline for US to impose the trade deal across the world, across many countries, will get over, and they may announce duties. India is trying to do a deal with US. Whether a deal is happening, whether the percentage of the duty which is impacted on India will determine whether there will be short covering into the market or we break this immediate support and head towards the lower level. So we'll keep eye on these developments and we'll keep sharing you about the developments through our daily market commentaries. We'll also, as a part of our complete product suite, we'll come out with investment ideas, investment and trading ideas across the week. On a Monday morning, you will share the new pick of the week. Also, we'll share the open calls which you can trade on our portal. So now, if you have any questions, we will answer them. So friends, if you have any question, you can ask on the chat box and we will try to resolve as many as possible. One question is on how is TCS and Info. So Infosys results are due. TCS results were below market expectation. Wipro was in line with market expectation. Now it is important that the Infosys results are watched very closely. If the numbers are expected to be more or less flat, if they announce a little bit of lowering of guidance, then it will be detrimental to IT. And if they, on the flip side, increase the guidance by 0.5%, 1%, that will change the outlook on the IT sector. So we will watch out for Infosys results. Reliance results are little below market expectations. The sales are down a little bit because the reported numbers which you read on newspapers and media is high because they sold huge amount of stake which they had in Asian Paints. That is an extraordinary income. If you remove that Asian Paint money, then the numbers are little market below market expectation. Real estate is going through a little bit of downturn, but we are hopeful that during the long cycle, we think that we are in the middle of a real estate cycle. There is still some years of long-term positivity in the real estate. So at lower level, one can remain bullish on real estate cycle. How to invest in baskets? So small case or invest in baskets is available on our InvestRight app site, on our apps. You can go and check there. HDFC SEC website. You can have more than 30 different curated portfolios and you can choose any of them. We won't be able to comment on individual stocks. This is a public forum. So we can't handle or answer questions on individual stocks. You can get security lending and borrowing is one more question. So SLB is one more mechanism where if you are a long-term investment, you can lend your shares to speculators. They will short it into market and give you interest for that. Get in touch with our customer service or our relationship managers at branch, and they'll be more than happy to tell you about the SLB mechanism. Is it a right time to invest? Yes. For the long term, if you are new to the markets, systematic investment plans or SIPs in mutual funds or DISIP in our DISIP stocks, that is a good way to invest for long term. We are looking at a intermediate volatility for next few months, as Nagaraj showed in the monthly charts. After 3-4 months of rise, we are in a phase of correction. This correction could last for a couple of months, but longer term picture, as long as the earnings are up, we can expect markets to do well. Okay. Defense. So defense stocks have had a fantastic run and they are going through correction. The valuation of many defense companies are very high. So we are very cautious on it. Longer term, the way world is behaving, the geopolitics are there that all countries are trying to increase their defense spending, and also they are trying to do the indigenization. So India also is working on a scheme for Atmanirbhar Bharat. All the offset contracts are given to Indian companies. So longer term, if you have a 3 to 5 year perspective at lower levels, we should be able to identify some defense companies and we should invest for the longer term. Yes, we do this fortnightly. Every fortnight we do this call, so it is available on our customers every fortnight. If you have any suggestions on HDFC Securities app on mobile, please share it, and we'll be able to pass on to our technology team, and we are more than happy to look for all the suggestions which you have regarding the apps. We'll be trying to resolve all these problems. All right. I think we have answered all the questions. Any last comments, Nagaraj? Before
Yes, friends. Yes, Devarsh, thank you. And friends, market is in a downward correction, and every downward correction in the past we have seen is an opportunity to enter into long term. As Devarsh mentioned, as we have shown in the chart, long term trend remains intact. This downward correction is going to be a buying opportunity. It may be a defense sector, it may be a IT, it may be realty. It is going to be a buying opportunity at the lower levels. Only thing is that we have to be patient in the market.
Subash?
Yeah, use any rises to build shorts for the short term, for short-term trading opportunities. And as Nagaraj pointed out, after a decline, one can start investing.
Okay. That's all for this webinar. I hope it has been useful. Thank you all for joining and have a great weekend ahead.